Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, now let's take a look again on the gold market. So just a few minutes ago we have taken a look at the euro currency, and as we said yesterday, the overall background stands mostly similar here because the driving factor is also the same. This is supposedly some weakness in the United States dollar that should last for 1, maybe 2 months, somewhere till the April, according to the chart of the dollar smile that we discussed in the weekly report. So 87.30, it means that on the dollar index, it means that currency should make the new low. It's completion of the major ABCD pattern on the monthly and weekly chart. That theoretically should become the backwind for the gold. But since euro currency stands in relation differently to the dollar compared to the gold, so if between the euro and the dollar is the direct relation, so the gold market has a relation, and the weakness in the United States is very supportive to the gold, but through the impact on the interest rates, which is a dominant for gold. And that explains why the gold yesterday, for example, shows not as strong action as on the euro currency. So if on the euro we have the upward action through the MACD, and the market actually is coming to the major resistance around 122, on the gold market we still have got the grabber. Theoretically, it suggests the taking out of these lows, although currently, in the current circumstances, I wouldn't consider it as some really big sign, because overall background still stands in favor of the upward continuation. But still, whatever it will be, grabber stands in place, and this is risk factor for the upward action on the market. Second, if euro currency have broken the intraday resistance, right here. So euro currency already stands above it on the way to the destination point. Gold stuck in this confluence, and that's not occasionally. Yesterday we said that keep an eye because market stands at 1840, 1850 confluence. This is not good point for taking the new long position. So it would be better to wait for some pullback or wait for the major pattern that we discussed here. Pattern actually also the same as on the euro currency on the 4-day chart, this large reverse head and shoulders. So if it will not be a proper and good condition for taking position on the pullback out from the confluence, in this case we probably should wait when the market hits 19 even somewhere 1875, and then on a pullback we could try to take the position. So that's in general the trading plan that we consider currently. On the hourly chart I put some levels, so actually market has completed the OP. It also creates the agreement resistance with the confluence. That's the reason why we said yes, they do not go long immediately right here, wait for a pullback. So some pullback already has happened right to the 30% support, 1832. It seems in the first glance that good area is 1825. It's around confluence support where market theoretically could reach and then start upward action. If this will happen, that will be not bad level to consider for taking the long position. Currently, in this moment, and everything stands positive for the gold. So if you'll take a look at the interest rates today are dropping, suggesting as gold will have the support and actually it could break through the resistance, which euro currency already did. In this case, we just will be watching for 1875. Those who have long positions, you just control your risk, manage your stop. For others, the entry point is still standing ahead if you haven't taken the position right at the beginning of this action. Additionally, on the dollar index, you could see this also stands good. Since dollar is dropping, that's actually the reason why the euro currency currently is moving higher. And that's the target on the dollar index that should be reached somewhere in the end of the March, 87.30, where they theoretically around this area, the change of the trend could get started. So that being said, on the gold market, it's also a lot of trading potential stance. Initially, we are watching for possible retracement. If it will not happen, this market will go directly to the 1875 XOP and the resistance area on the 4-hour time frame chart right here. And after that, we start to watch for large reverse hand and shoulders, which could put the background for a stronger upward action. And that indeed might happen, as the drop on the dollar index supposedly should last at least for another month. That makes possible for gold also climb a bit higher. We're not talking about maybe breakout of this top, but at least some A, B, C, D on the dollar performance. It could be good form, especially if interest rates will stand flat or even also will show some pullback. So that's approximately what we keep an eye on gold market as well.